Yeah, so I mean, there's a company called MBS Highway. They have a cost of waiting calculator. So it's not saying please wait. It's telling you that every time you're waiting, there's a calculation cost of that you're losing equity in your house. So there's a common saying too, marry the house, date the rate. So I know people are rate sensitive, and we might not like that interest rate, but the reality is that you're passing off, you're passing on gaining equity. Anytime you're renting as a landlord for 20 years, I was very thankful for those tenants that helped pay for my retirement accounts and paid for they're paying my mortgage in the property. The tenants are paying the mortgage. So you would be better off paying your own mortgage, even if you're not gaining a ton of equity at the time and the rate is not as attractive as you like. At some point, the rate will come down to a rate that you feel confident with that you can refinance, or I'll refinance it for you at the right time, and now you're gaining more equity. Houses have gone up, over value since the beginning of time. There's only one down tick, I think, in the last 50 years. So, home ownership is critical. So that's one of my real passions is to get these people into home ownership.
Hello and welcome to the Smart Business Owner Podcast with your host Schubert. Hello and welcome to the Smart Business Owner Podcast. My name is Schubert and I am so happy to have you today for this very special episode. Today we have a treat. We have none other than Nate Servidio joining us. Nate is a seasoned mortgage broker within the community and a key player when it comes to business referral. So he's here to share his journey with us, to share his business secrets and how he used the power of referral to build his business and how you can follow his lead to build your own business the same way he did. So Nate, welcome to the show.
Thank you, Schubert, for having me. I'm excited to be here. This is great.
Awesome,
Awesome.
man. So today's Friday, so we hope you had a great week. So why don't we dive right into it, Nate? I mean, obviously, I've known you for a while now, but for those folks that don't know you, why don't you talk a little bit about your background and, how did you, where you're from and how did you get started?
Sure. So I grew up in Massachusetts. My parents had four restaurants, so my entire childhood was through restaurants, and then I went into a long hospitality career of 30 years in the restaurant business, and then I switched over to the mortgage business, and so it's still all customer service based, and moved down to Florida, and I'm enjoying paradise.
Yeah, that's a Florida weekend. That's the closest thing we have on earth that
Yes,
resemble paradise.
definitely.
So, the transition, what would you say that was the thing that motivated you to make a change? Was it, something that happened in the restaurant business? Can you talk a little bit about that?
Yeah, the transition was mostly designed for like delivering the next step in a lot of people's lives that I've touched. So in the mentoring of a lot of my staff that stayed with me for decades, and I got them through high school and college. A lot of their next steps is really home ownership.
Right.
So that's where I think is my calling. I've helped them get through their first phase of their life, so now I want to help them get into their hopefully their next financial step of home ownership. So.
That's awesome. That's awesome. I mean, the that industry is a very hot commodity. It's a very hot industry, especially this time of the year, and especially the way the economy is. But before we dive there, entrepreneurship is a journey. It's not it's not something you do today and tomorrow forget it. It's a lifestyle. It's a journey. What would you say some of the things that although you come from the restaurant industry, but what would you say some of the things that motivated you to become a business owner and to take the leap when it comes to entrepreneurship?
Yeah, I think I've always had that type A personality drive to always just be in control of your future. So instead of being in the backseat hoping that someone can dictate where things are going to go,
Right.
when entrepreneurs are dictating where they're going. So, and that's from being a restaurant manager where you're running your ship, your restaurant, and now into mortgages. I'm dictating where the mortgage goes to make sure that it lands smoothly for you for your home. So I like being in a control seat where you can really impact someone's life. So.
So definitely. So you controlling your own future, as a business owner, one of the main reasons that I do is because not only I can control my own schedule, but also I control my destiny and being able to bring value to other people's life.
Yeah.
Now, this journey, as you probably would agree with me, it's not an easy journey. It's a rocky journey. It's a lot of ups and downs. You
Yes,
know,
definitely. Yep.
so, what would you say, some of the experiences you had when it comes to challenges, when it comes to entrepreneurship, and how did you overcome them?
Yeah, you definitely need to be able to roll the punches, and whether it's the economy or situations in a transaction where maybe they inspect the house and the septic doesn't pass, so now the deal's dead and your buyer's back at it. So you need to constantly be able to pivot and move with all the different things that come at you. And the more experience you have, and the more times that you've got punched in the face, the more times you can hang in the ring. The first time you might get knocked out, but after you get the 9 rounds, you feel like you take a lot of different obstacles and move right through them. So
That's interesting. You're saying that. I was watching the news yesterday, and the anchor of that TV station, he was in Philadelphia, and he grabbed his phone. He was at the Rockies arena, and
yep,
where Rocky donated a statue, way back when for that movie Rocky
yeah, I've
Balboa.
been there. I've been there before.
Okay. And he called Rocky, and he's like, I'm on that spot right now, And Rocky was like, really? So I don't even think about, Rocky anymore. I'm just happy to, to have my family and living my life.
Sure.
But the reason I bring that up is because if we can use some of the word of Rocky Balboa, it's not how much, how hard you can get hit, you can hit. It's how hard you can get hit and keep moving forward. How much you can take and keep moving forward. So that's basically what you said when it comes to being an entrepreneur and being able to roll with the punches and not just stay down after you get knocked down, because
Yeah.
it's not a question of if you're gonna get knocked down. It's a question of when.
Right, and you know you're going to get knocked down, and you know you have to get back up, and then the quicker you get to your feet, the quicker you can get back in, and get things back on track, whatever it may be in your life. So
That's awesome. That's awesome. Now, let's transition into the meat of our conversation when it comes to mortgages, which is what you're here to talk about. Why did you pick that field? There's so many different things. Being in the restaurant industry is not particularly the same thing as being in the mortgage industry. However, you're still dealing with people.
sure.
What was the motivation that pushed you into that field? Was it some friends' influences? Was it family? Why did you pick
Yeah, my brother
mortgage?
my brother was definitely a strong influence on it, and so there's probably 3 or 4 different reasons that I chose mortgages over anything else. I've always owned real estate. I was a landlord for 20 years, so I
Okay.
love the power of real estate to gain wealth. So I've done that as one facet, and I understand um, buying and selling real estate, usually for the long term.
Right.
My mom was a math teacher, so numbers and math is comfortable for me.
Right.
So reading is okay, but math is, 1 and 1 is always 2. So doing math is a huge part of mortgages and making sure the math works. So with the math background, and then the whole customer service background from the restaurant business, and working quickly to resolve issues and to make sure that the customer is going back to the referral part of it. Obviously, it all ties together. So a little bit of the restaurant business, a little bit of the math, and a passion for owning real estate myself. So
That's
a little bit of
awesome.
all of
That's
that.
awesome.
Yep.
Besides, when you're in a restaurant business, you're dealing with consumer on a daily basis, and in the mortgage business, you're still dealing with people. The only thing
Yep.
is, it's you're dealing with numbers, like you said, and if you're comfortable with numbers, it makes things a little bit easier. Now, is how long since you've been in that field now? Is how long since you make that leap, and how things been going so far?
Yeah, so I've been in the mortgage business 4 years now.
Okay.
So, and a lot of the industry has changed in the 4 years. 50% of the loan officers have left the business in the 4 years that I've been here. So, some of the people I started working with when I got in here who were have chose because of the uptick in rates, the economy, where there was a supply issue with housing. So there's been many different challenges along the way and I've fought through all those challenges, it's actually great for the consumers that there's less of us in the business because you should only be now dealing with seasoned professionals. We probably were a little overpopulated with the refi boom where people were coming in for the quick grab cash, got their license, did the refinances, and then when the market switched, a lot of them decided to bail out. And I'm in it for the long haul, and I feel like it should be a great career for me till I get to my retirement days.
That's awesome. That's awesome. And I mean, this industry, especially right now, with the way inflation is, if you do not know what you're doing, the mortgage risk can be significantly very, very high. Obviously, I'm sure you're gonna be talking about that a little bit, but can you share with us, for example, somebody's listening, what are some of the most important thing somebody thinking about getting a mortgage, what are some of the things that you think they should be paying attention to? Not just about the lowest interest rate, but what are some of the things that you make sure that people should be paying attention to?
Sure. So it doesn't really matter where you are in the home buying process, and even if you're looking, maybe you already own a home and maybe you want to buy another home, you should always know your credit score. You should always have an idea where your income is, and you should always have an idea where your debt to income ratio is. Now, you don't need to know those numbers. I'll calculate them for you, but I'll tell you if you're in line or not in line. So maybe you're looking to buy a house in a year or 2 years, or maybe you want to upgrade your house in a year or 2 years. So wherever you are in the process, you should kind of have an idea of your credit score. Credit scores are critical to the loan process. Having a down payment saved or where you are financially is so you're really taking a holistic view of where you are. And a lot of home buyers, unfortunately, are scared to take that first step to contact someone like myself because it is a look behind the curtain, and they might not be proud of their credit score or the fact that they haven't saved enough money yet. But you need to hopefully establish that trust with someone like myself, and that you can take that first step.
It's kind of like going to the doctor. Sometimes we push that the physical or that checkups
Sure.
because we don't want to see the numbers.
Sure. Right. You go into the doctor, they make you step on the scale first thing right off the bat. You're like, geez,
Right.
I didn't want to do this today. So, but then you get your blood check done, and maybe your cholesterol is okay, your blood pressure is okay. So maybe you need to lose a couple pounds, but they give you a
Right.
game plan. And that's the same thing that we're trying to do. They're trying to take care of your health. I'm trying to take care of your mortgage health. So,
It's for the better as well because as you never go, you would never know your numbers. And
right.
the fact that you go to the doctor, like now you know that maybe you have a cholesterol problem, maybe you have, you need a little bit, you eat a little too much. But now that you have the numbers, so you say, okay, this is what I need to do to make sure that I'm in perfect health. Same thing I would say for, when they come to see you, even though they're not too happy to come, but when they do make the first step, that's what happened.
Yeah, it's the same for you as a financial advisor. People need to make that first step to start putting money away towards their retirement,
They do.
and maybe they haven't started, and so they're scared to even call you because they haven't even started, and that obviously doesn't help. It's the same.
They don't want
We
to.
are
They don't want to hear it. They don't want to know the numbers.
right, and but the best thing you can do is just get to the doctor, get to the financial advisor, get to the mortgage person, know your numbers. If
Right.
you don't know your numbers, we'll help you. We'll help you to get to your numbers, and then we'll
Right.
make a plan for you.
Now, when it comes to mortgages, there are different type of mortgages. There's short term, there's long term. Can you talk a little bit about that? The different type of mortgages people can choose
Sure.
from.
Predominantly right now, all the mortgages are 30-year fixed rates. So at times, adjustable rate mortgages are more attractive. They haven't really been in the marketplace in the last 4 years. I would think they'll come back at some point, but right now the rates are still more attractive on a fixed product. There is a 15-year note, which is 50, so you're paying off your house in 15 years, which is a great product. If you can qualify for it, it's a higher payment and you're going to gain equity and pay off your house quicker. But it's not necessarily always the best situation. As you know, as a financial advisor, if the interest rate is attractive at the time,
Right.
you might be better served to put that extra cash away towards your retirement. So, but there's a whole variety of mortgages, and the more I try to fit the mortgage to the client, that's a really important part there. So, sometimes it's real simple. If they're a U.S. veteran, then they're going to use a VA loan with 0% down. So that's kind of a no-brainer.
Okay.
First-time home buyers, the FHA loan goes to a lower credit score. of 580. Now we can go all the way down to 500 here, all Western. So that really helps out someone who's got maybe a dinged up credit score and they're kind of embarrassed to come see us. And well, next thing you know, I already have them pre-approved and they're shopping. So
Right.
that's why you need to, although you might not be proud of that number, well, we'll fix that number over time, but that doesn't mean you can't become a home buyer today. So you need to know those numbers. So, and we have a tremendous amount of what are called non-QM loans. They're non-qualified mortgages, and
Okay.
these fit different scenarios. And this is where we match the loan with the person or the property. So most self-employed people file 1099 income on a Schedule C or 1120S, and they're not going to show a lot of income on the taxes to keep their tax burden low. But that hurts their income for mortgages. So we have like a bank statement loan where we average the deposits over the year, and we calculate that into an income. So there's a debt service coverage ratio loan, which is great for an investor. We use the income on the property to qualify you, and then we use your credit score and a down payment. So again, every loan must match the person and the property. So that's what we specialize here. So it's not a cookie cutter industry. You really need to adapt to what the client needs.
Now, that's exactly where I was going to go. When it comes to mortgages, a lot of times, some of the things that people tend to worry about is that, am I going to be qualified? I don't want to apply because I don't know what I need to qualify.
Sure.
So, what would you say some of the criteria people need to know in order to qualify for a mortgage? And if they don't meet those criteria, what are some of the things that they can do to meet them?
Yeah. So credit score again is a big component. So the
Okay.
three components are credit score, income, and down payment. Now, your income, you're probably not going to be able to change too much. If you're a salary, if you're a teacher, you're going to be stuck on that income. You're not going to be able to drastically all of a sudden be able to double your income. So you should know your income. And obviously, for the income piece, we're looking for stability. So underwriters want to look for it's a 2-year look back on your income, and they're projecting a 2 or 3 year future for your income. So if you're staying in the same industry and you've been the same teacher at the same school for 7 years, that looks very stable. If you're hourly and you're changing careers as well as your income, it's very difficult for the underwriter to calculate that income and feel like there's going to be stable income. So stability of income and not changing your income type is critical. So if you go from W-2 to self-employed, that can stop you from getting a mortgage, or it can make it more difficult because they're looking for 2 years of the same type of income. So if you switch from salary to commission, so these are things that I need to know about before you want to switch. And these are the conversations that hopefully, if you give me the opportunity, will walk you down the path, on that. So income is very important for stability. The down payment, there's down payment assistance programs, and we obviously need to calculate how much of a purchase price you need, and then we'll work backwards to see how much cash you will need in assets.
So the type of mortgage makes a difference, if it's an
Correct.
FHA or if it's conventional loans.
And the credit scores are critical. The higher your credit score, the lower your interest rate is what the higher the people with higher credit scores will get the better rates in the market. So when you're seeing a credit interest rate being advertised on an ad, that is traditionally a higher credit score with a larger down payment. So and that's in the fine print, and that's where I'll help you surf through the fine print to find out exactly where you fit in.
Now, no, some people, they may have the income. For example, if you're looking at business owners, they tend to write off a lot of stuff, a
Mm-hmm.
lot of things on their taxes, and because these are the things that they use to build a business. They do have the income, but they may
Yep.
be showing a $50,000 in income, maybe showing $100,000 in income, whereas the gross revenue could be $500,000 or $1 million revenue, but they show very little income because they write off so much stuff through the business. How can you help somebody like this that doesn't show much income but yet want to have a great home?
Yeah, so there's two great loan products for that, and those are basically the bank statement loan, which takes a 12-year month or 2-year average of your bank deposits. There's also the profit and loss statement loan, and these are documents that we obtain through your CPA or your tax expert. And we use this income to qualify you. They are a little bit larger down payment. You're going to need typically 15 to 20% down. So, but they're great for self-employed people, homeowners, and that type of people.
Okay. So, it's very, I mean, right now, especially with the the landscape for the mortgage market. We have an elections going on. We have, the Fed promised to lower rates a little bit.
Yeah.
Some people may say, hey, you know what, I want to wait because, there's an election, there's a lot of uncertainty, or maybe I can get a lower rate if I wait 3 months down the road or 4 months down the road. What do you say to these people?
Yeah, so I mean, there's a company called MBS Highway. They have a cost of waiting calculator. So it's not saying please wait. It's telling you that every time you're waiting, there's a calculation cost of that you're losing equity in your house. So there's a common saying to marry the house, date the rate. So I know people are rate sensitive, and we might not like that interest rate, but the reality is that you're passing off, you're passing on gaining equity. Anytime you're renting as a landlord for 20 years, I was very thankful for those tenants that helped pay for my retirement accounts and paid for they're paying my mortgage in the property. The tenants are paying the mortgage. So you would be better off paying your own mortgage, even if you're not gaining a ton of equity at the time and the rate is not as attractive as you like. At some point, the rate will come down to a rate that you feel confident with that you can refinance, or I'll refinance it for you at the right time, and now you're gaining more equity. Houses have gone up, over value since the beginning of time. There's only one down tick, I think, in the last 50 years. So, home ownership is critical. So that's one of my real passions is to get these people into home ownership. So,
It's kind of like the old saying, God is not making any more land. So you better
right.
make sure you better hurry up, get your own piece and buy a house or build a house on it.
Yep, exactly. Get in the house as soon as you can. And I have a perfect example is about 3 years ago when we really had no inventory out there. The clients could not find a house, but they knew they'd be better off in maybe not the house of their dreams and stop paying rent. So the house has already gone up 20% in equity. They only put down 5% at the time. So they've already picked up 15% equity in the house. They've made the improvements on the house that they wanted to. So now it feels like their home. They redid the kitchen. They made it, they changed out a couple of features in the house. Nothing crazy. We're not talking about adding on additions. And now that house that was maybe just okay in the corner is now their dream home. And at some point, if they expand their family, then they'll move to a bigger house. But all along, they're gaining wealth. So that's a critical thing is just to get started.
I agree. I agree. I mean, it's like the old saying, the sooner you get started, the better off you'll be.
Right.
Now,
The same for your industry as well.
yeah, when it comes to the process, what would you say? How long does it take for someone to get like any kind of type of loan? Let's just say conventional or an FHA loan. How's the process look like, and what kind of time frame people are looking at? You looking at for right now?
Yeah, so typically, if a client were to call me today and they had their documents all ready to go, we can get them pre-approved sometimes the same day. So if you're not sure of the process and you don't have your documents, I would think in a week, let's say I ask you for maybe your tax returns or some W-2s and you're tracking down some documents. So I would say, let's say a week max, we have you at least an answer to whether or not you when we qualified or not
Pre-approved.
qualified and pre-approved and what dollar amount you're shopping. So once we get your pre-approval letter out there, now you're working with a realtor, and now you're shopping with confidence. Let's say you find the house.
Right.
If you find the house and you're under contract, that all should be done in 30 days or less. So the key really is just to get started. Let me get you pre-approved, or if there's something that we need to work on, let's get working on that now, so that you're ready to shop with confidence when the time comes. I'd rather have you shopping with confidence, so when the house on the market does come available, you're not scrambling, going, "I should have done this 2 months ago. I didn't think that house was ever going to become available. Now it's available. I'm not prepared. I don't know how much money I need. I don't know if I can get qualified." So we try to stay, ahead of the entire home shopping process. We should be your first stop.
Now, some of the people that are listening to that, they may say, "Hey, you know what? I have my brother, I have my nieces that just got a mortgage license. Why should they use you as opposed to using the brother that just got a mortgage license or their sister just mortgage license? What's the
Sure.
difference?"
Yeah, sure. Just like I think someone brought it up in a networking group the other day that 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 they needed back surgery, and one of their friends just graduated medical school. So are you going to use the medical the someone that just graduated medical school or the renowned surgeon? So these are the big factors. So The fact that I've been doing this for 4 years, I feel like I have almost a master's degree now in mortgages where, and there's still more to learn, but I'll ask the questions and we'll make sure that you're in a good shape. But you want to work with a seasoned professional that has confidence that he'll get the job done for you. And that's where I come in.
Because that's a big investment. That's for some folks, that's gonna be the biggest investment they ever done in their life.
Yes. And like when I'm issuing the pre-approval letter, I'm expecting this loan to close. So we obviously don't know what the house looks like. Like we don't know what the inspection is, but you're putting down an escrow deposit. This is your hard-earned money that you're putting out on the line. I take that very serious. We obviously want to make sure, heaven forbid, the contract falls through, that you're going to get this money back. But we want to make sure the loan closes. We're not issuing pre-approval letters just for fun. We want to make sure this is a transaction that will close. So it's really important that you work with someone like myself that the loan's going to close. You can shop with confidence. You're going to get your house.
Now, staying on the same topic, when it comes to yourself, for example, why would you say, there's a lot of mortgage broker out there, doing the same thing you're doing? Maybe not as much as realtors. Realtors have by far a lot of realtors out there, but there's a significant amount of mortgage brokers. How do you differentiate yourself? How do you bring value to your client that's going to be like, well, I'm 10 times better than working with Nate as opposed to working with the guy down the street. That is a professional, but not you.
Sure. We're all going to offer relatively similar rates for the similar products. Like an FHA loan is an FHA loan. So being able to find solutions for each client is critical. So we obviously have a wide variety of different loan types. So most of your cookie cutter banks will not have half the loan products that I have. So for self-employed people, investors, we can entertain all those with different solutions. We have asset depletion loans. So there's loans that most banks will not touch. So we have a lot more products that we can help you get that house with. We can go lower on the credit score. I pride myself in the customer service coming from the restaurant business. So if a client doesn't come back, then you're out of business. So very important that all my clients are very pleased from the start of the process to the loan closes, and then they're going to refer me to the next person. So it's a combination of customer service, speed, transparency, honesty, and then obviously we don't have a great company behind me with All Western that we have multiple loan products really to help almost any situation. So
That's great. That's great. Now you mentioned customer service. What's your approach? Obviously you come from the customer service world. So what would you say is your approach when it comes to customer service, making sure that the client is taken care of? It's not just like, hey, thank you for your business, move on to the next one. How do you bring value when it comes to customer service to making sure your clients are taken care of?
Well, we used to always talk about in the restaurant business, the hospitality gene. You either have the hospitality gene or you don't have the hospitality gene. So either you care automatically and you want to take care of your client,
Right.
or it's a job for you. So I have the hospitality gene. I've always had the hospitality gene. So when I get a client, it's an automatic taking care of the client. It's not I don't need to be reminded to do the right thing. It's my DNA. So whether it's answering a phone call, answering a text, being available, understanding their concerns. Maybe they're in a hurry. Maybe their landlord is kicking them out. So this is a time sensitive issue, or maybe they just have a ton of questions and they're really confused, and be able to slow the process down for them to make sure that they feel confident throughout the process, and you're educating them on the steps that are taking. So it's a different. You have to be able, just like as family of six comes in or family of one comes in. You need to be able to cater your services to what they have, so what they need. So I think I do that very well.
That's good. That's good. Now, there are some cases that can be complex where customer service is really going to play a role. For example, sometimes I would hear a mortgage broker have a client that is overseas and have family in the state, but they are the one that's the principal borrower on that mortgage. Do you take care of
Yeah.
things like that?
Just had a closing last week where one client was actually went from Brazil to Florida to Canada, and the other client was in New York the whole time. And then we had the hurricane in the middle of it all. So, and we still closed. So, yes, no, we can adapt to all different types of situations to make sure, I'm in Florida, but you don't need to be in Florida.
So
So
everything can be done remotely.
yep. So, and every situation is different, and that the title company plays a big role in that, but making sure that you're shopping with confidence, and obviously you have a great realtor that's going to check the property for you. And so, but you can definitely put a team together remotely, and it happens quite often because Florida, as you know, is a transient place. People come here usually for the winter, and so a
Right.
lot of times this is their second home. So
That's great. That's great. So, that fear that some people may have, say, hey, I wish I was in Florida, or I wish I was in the state. They can still working with you.
yep.
Now, we know that once that mortgage is done, they sign on the dotted line. The work is not really done. So
Right.
after the mortgage have to be serviced. Can you talk to us about that? How do you bring value? How do you service your client and post signing, post owning a real estate or home? How does that process look like?
Yeah, so after the closing tables you've left, you don't have your first month's mortgage statement. You probably haven't filed your homestead. So there's steps to be taken along the way, and being available to them and be a resource for them is really critical. So reminding the clients to make sure they file for their homestead, which has to be filed by March 31st. So making sure you're filing for your homestead deduction if it's your primary residence. Looking out for the mortgage statement. So you should be looking out for a mortgage statement. So I'll put reminders on my calendar and just making sure the client gets that first mortgage statement, because a mortgage that is paid late is almost a death sentence in this industry. So we want to make sure that that never happens to you. It's very
Late payment is
catastrophic.
not good.
Yeah, late payment on mortgage is almost catastrophic to your credit score and to your ability to get a mortgage. So now I do have abilities with other loan products to get you a mortgage, but it's not something that I would prefer you don't even entertain. So getting that mortgage paid on time is critical. No mortgage late. And then of course looking out for your homestead, renewing your homeowners insurance. Maybe you are not happy with your current insurance and you're looking for another agent. I have clients call me all the time. They need a plumber, electrician, a roofer. So I'm with them from until I don't want to say for the whole 30 years, but I'm with them for quite some time after the closing. And if they're looking for another house, then I'm stepping back in for their if they're expanding their family. So
So it's basically you hold their hands all the way from the starting point where they were just looking at to get pre-approved, and all the way through signing the loan and owning the property and going forward. You holding their hands all the way through.
right, just like you as your financial advisor, you're advising them now is a good time to buy, and you're structuring the real estate piece with their retirement, and you're holding their hand and making sure they're making the right steps. I'm one of those steps along the way.
That's very good. That's very good. Now, when it comes to there's a lot of different. How would I say that? There's a lot of different home, the different size of property, and
Mhm.
sometimes somebody may want to have an income of 100,000 and they want to have a home for $1 million. So somebody is thinking about going to buy the next home. What would you say that one thing, that one advice? Besides, we talked about credit score, we talked about getting the
Sure.
papers. What would you say that one thing that is critical that every single business owner need to know before they even start the process?
Yeah, I'd say car payments are a huge obstacle for qualifying for a mortgage. So your student loans, obviously you went to college, maybe you have student loans and you're kind of stuck with that debt and you were obviously taking that debt out at a young age. Your credit cards, obviously, if you can pay those down to a small amount where the monthly payment is a lower factor. But I see a lot of people coming to me with $1,000 a month car payment, which is the number one blockade for them to get a mortgage. So had that car payment been $300, they could really increase their buying power. So be very conscious when you're buying cars of that monthly payment. If you're looking to get a car and a house, I would go as low as possible on your car payment. Maybe you're stepping down to a car that you you'd like to have that Mercedes or the Porsche or something really nice,
Right.
but let's get the Camry. Let's get you in the little four-door Camry. My wife drives a RAV4. Keep yourself below your income debt limits,
Live
and
below your
and
means.
below your means. And as you as a financial advisor, we love people below our means. And
Right.
then get into your house, and then when the time comes, you can get upgraded to the next car. So car payments, I find, are can be a big chunk of debt that they have a big control on.
So basically, keep their debt in check. Do not indebted themselves too much.
Yes, yeah, car payment because obviously with student loans you went to college, maybe you're coming out with $100,000,
Right.
but the student
Most
don't.
most students these days, at least, they're gonna come
Yeah,
out with 100K because price of car is so expensive.
with the student loan debt calculation is only 0.5% of the total,
Okay.
so it's a very low. It's regulated pretty well. Where a car payment, until you get less than 10 payments left on the car loan, we have to hit you with that payment. So, uh, um, well, yeah, we can definitely look at people's debt to help them navigate that, but try to avoid that signing that hefty car payment.
Now, do you see a lot of young, people, a lot of young folks have to have the parents co-signing for them on those loans? How would you say the market is right now for young people, young folks, looking to aspiring or becoming
Yeah,
homeowners?
yeah, co-signers are very common, and getting that step up is very common. So there's nothing wrong with getting that because
Have mom
house
and dad
prices
help
have
you?
yeah, house prices have come up significantly. Obviously, rates are up a little bit higher. So between the combination of the higher home prices, until the incomes have really caught up with the home prices, you're probably going to need a little helping hand. So and there's nothing wrong with that at all. And we use co-signers all the time.
That's good. That's good. Now, do you only do residential loans or do you also do commercial loans? And if so,
We
how does
we
that
do
work?
we do have a commercial division, but I pretty much stay right in the residential zone. I'll do anything from one family to a four family. So we're not typically working in the 8 to 10 units. We can handle those loans. So we have a whole commercial division here at All Western. So if the scenario fits for us, we can do the loan.
Any limits as far as the amount of loans you guys will do or would not do?
The commercial area is not really my area that I would probably speak about. So I'd have to get back to you on more commercial information. I
Okay.
I do all the traditional residential, up to $4 million, or most loans are up to about 4 million for the residential side.
I remember when I was, buying my home here in Wellington, and I went to the bank. It was way back when I was in 2011. I went to the bank and they wouldn't make the loan, and I went to a different mortgage broker to make the loan. And 2 weeks after they make the loan, they sell the loan back to the bank, the very same bank that they want to make the loan.
Yeah.
How does that work? I mean, how do you explain that?
Yeah, the behind the scenes, they're buying the treasuries. I mean the bonds, and they're sold in the secondary market. So I don't handle that, but basically they bundle up, all these loans, and they'll sell them off at 100 or 200 behind the scenes. That's more in your area, the mortgage-backed securities that you're watching in the market.
Right.
So you'd probably be seeing who's buying them faster than I would be.
Well,
So I'm just trying to get them closed.
but the thing is, that's one of the things that's caused a lot of trouble, around 2008. But right now, with rates, the way things are, they already lowered the rates, 50 basis point.
Mhm.
Do you think it's gonna be low? You're gonna go lower? Do you have clients that say, hey, like you said not to wait, but do you try to
Yeah, I don't
forecast these
see
things
I
or
don't see I don't see any rapid movement in the market because even though they have done a 50% basis points, the rates were actually lower before they even did the cut. So we're actually holding pretty steady right now in the sixes. I think they're going to after the election we might see a little movement. The economic indicators are that they can cut rates, so they will continue to cut the rates. The market kind of is ahead of where the Feds are. So until I think the market
always?
feels, yes, until the market feels that they can lower the rates, they're going to hold a little steady. So I'm hoping that will be in the low sixes and high fives in the next 6 months to a year, but it's not enough of a difference in your life to put you on hold from buying. I mean, the rents out there that people are paying are quite I mean, they're $3,000, $4,000 some of these places, which is,
Right.
your mortgage payment could be less. So not only are you saving money, you're investing in your future
Right.
by building your equity. So
Awesome. Awesome. Now, you and I, we met through the professional referral exchange network in Jupiter. So, you're obviously the president. Can you talk to us about a little bit about, how's that process? Why did you join a referral group for your business? Has that been profitable for you?
sure. Yeah, so I started Professional Referral Exchange. Bob Beck was one of the members, who's actually the member in Delray. Was very familiar with Professional Referral Exchange, which has been around for 20 plus years out of Pennsylvania. And so Betty and Craig, the founders, came down to Jupiter, and they were looking to start an organization. So, I was in the Rotary Club up in Connecticut, so I was kind of somewhat familiar with these groups, although the Rotary Club is not a referral group. So I knew that I needed to get out there and meet people. Being new to Florida, just trying to grow my network. This was a great opportunity for me to join this group, not knowing that it was going to fulfill this much. I thought it was going to be more like just a place to go have coffee with some people. I didn't know it was going to be a referral family, so it's a little bit different than your typical networking event where people just come and go and they gather. We are really trying to have one from each business category that is a seasoned professional that we can refer to. So we really are building, again, when my clients come to me and they say they need a financial advisor, I can recommend Schubert. If they need a roofer, I can recommend a roofer. Or we have a phenomenal air conditioning person, that Randy, in our group. So we have different people in our chapter that we can refer to, which makes us all look great as, to our clients ultimately, which then leads to more referrals.
Now, when it comes to this, a lot of business owners, they know that the power of marketing. So, there's a budget for it every month. Compared to if they were, if they belong to a referral group where instead of waiting for the client to come in, hopefully after they spend, I don't know, $5,000, $10,000, $20,000 on Facebook ad, how would you say is what would you say is the biggest difference between a business owner that's just running ads or running radio, TV ads, or Facebook compared to receiving referral directly from other professionals within the industry, like, the PRE group that you and I are part of? What would you say is the biggest difference?
Yeah, I mean, obviously, we're driving down the road. We see the billboards. We're probably not going to call that billboard right away, if we're looking for a roofer or a financial advisor. So, but if you're having a cup of coffee with one of your friends and they're talking about finances and they're kind of lost on where to get a financial advisor from, and that person's my friend, and I'm like, wait a minute, you should be calling Schubert. I got a great guy who's seasoned professional. So the referral it's a human connection. There's 20 plus members in these groups, and we all have at least we all know at least 250 people. So it's a large amount of people that we know, to connect.
So basically, it's a huge difference compared to just running ads, Facebook, radio.
Yeah, definitely. The human connection, the power of the referral, and when I'm referring someone, it's a trusted person that I'm sending to you. So yeah, it's much more tangible than it is an ad. If I refer, Mike, the realtor in the group, then I feel confident that he's going to take care of you, and there's a connection there.
Now, how long you been in the group now?
I was one of the charter members of this group. I think it's been 3 years. It might already be 4 years now
Wow.
that Jupiter has been. Yeah, I started it as one of the existing members, and shortly took over as president. And now we're just trying to grow to the next level.
Would you say it's been it's been a nice ride, a successful ride? How would you describe, your time with the group so far?
Yeah, not only are you getting the referral business, you're building friendships that are going to last a lifetime. So that to me is a huge part of why we do it. We get to see the same faces every day, and then as we grow with new members and seeing, it's great to see the success stories Like Chrissy, our photographer, is like one of our model students. She came in, was a shy, so public speaking was not her strength, and she was new to the photography business, and her business has taken off, and of course she does a great job, but because of the referrals.
So, Nate, when it comes to PRE, how long you been there, and how long has been the journey for you over there? Has it been successful?
Yeah, it's been a great addition to everything that I've learned. So I started at PRE 3 or 4 years ago. Bob Beck invited me to attend a meeting. Bob Beck was a member of PRE in Pennsylvania, where we're based out of. Betty and Craig are the founders. It's been over 20 plus years. So I didn't really know what PRE was. I didn't know professional referral exchange. I knew that I was in the mortgage industry. They needed a loan officer, so I was excited to be the loan officer for the group. So we went to the meeting and we just started having coffee, not knowing really what I was joining. And it's a referral family. It's not just a networking group where you just show up and pass cards. So it's
Right.
really get to know and like each person, know what they specialize in, and know how they can help either you, your clients, or how you can be a resource for each other.
Would you say your time has been successful with
Yeah,
professional referral exchange?
very successful because you are, not only as the president am I able to lead the group, so I enjoy using my leadership skills. You're obviously practicing your public speaking skills every Tuesday. You're mastering your infomercial, so you're really getting polished on how to deliver your skills to your clients. Because sometimes, I might meet a realtor or I might meet a home buyer, and I got about 30 seconds to make an impression on them. So by repetitiveness of this, you're meeting people that are going to be lifelong friends. So, I've gone on vacations with some of these people. So it's not just having a cup of coffee and swapping a business card. It's more to it than that.
It's somewhat building an extended family.
Yes, definitely.
Yeah. So before we wrap up, one thing I want to segue just a little bit back when it comes to entrepreneurship. Looking back now, you've been working in two different industries, and if anything, is anything would you do differently? What would you say something that if you could go back, you would go back and do it in a different way, if anything?
Yeah, I mean the restaurant business, I had so many great relationships, but the ability to help people with their largest home purchase is much more fulfilling than it is to give a great lunch experience. So the lunch experience was great for them. It's 45 minutes, but if I can get someone to buy their first home and start acquiring their wealth and buy a house in a nice town for their kids, I mean, you're really making a huge impact. I had one client, for instance, his landlord was selling the house and he did not know how to qualify for the mortgage. So we actually took his student loans, which were deferred. We turned them into a payment so he could qualify and get all this done before he was going into retirement in 2 or 3 years, because now his income was going to change. So he had a very small window to get into a house and be secured for housing for the rest of his life.
Wow.
Had he not jumped on that window at that time, then it would be catastrophic for him. So
Now, as you're saying that, what comes to mind is reverse mortgages. Can you
yes.
tell us a little bit about that? Is that something that you do, or do you refer that out? How does
Yep,
that
yep.
work?
I'm actually I'm like the expert person in our group. So of our division, all reverse mortgages are started through me. So they're a great product for anyone over 62 who has home equity that they'd like to tap into. I'm very passionate on that because some of our seniors are unfortunately losing their house because they do not know how to tap into their equity to stay in their house. And most seniors want to just stay in their house until they pass away. And this opportunity is being taken away from them because they're not aware that they can use their house as collateral to stay in that house.
That's good. That's good. That's very good tips, because our seniors, we need to protect our seniors, and a lot of time they don't know what they don't know, and having that piece of information is very, very important. Now, a business owner that's listening to this podcast and you say, "Hey, should I really use the power of referral to grow my business?" And it doesn't have to be, PRE, professional referral exchange, or it could be any group. What would you tell that person, that business owner that's thinking about using the power of referral to build a business? What would you say to them?
Yeah, this is where you want to be. This is where the I can't think of the saying there, but this is where you want to be to get your business started, working with people that are going to be your sales force. So we all have a circle of influence of 250 people. I know I have 1,000 contacts on my phone. So, this is your circle of influence. We're your sales force. So while you're working on your marketing, your social media, we're going to be your largest sales force and hopefully your largest creator of your business.
That's awesome. That's awesome. Nate, it's been a pleasure to have you today. So, Nate, so the people that are listening to these podcasts today, if they want to reach you, how they can get a hold of you to help them, in their homeownership journey.
Sure. So it's Nathan Servidio is my name. My phone number is 401-529-4654. And it's nathanservidio.allwestern.com. So I'm sure we'll put that somewhere in this chat somewhere, and we'll be good to go.
What about, are you on social media as well?
Yeah, I'm on Facebook, and I'm on Instagram, and I'm on LinkedIn.
Okay. So they just look up Nate's video.
Yep, Nathan Servidio. Yep, exactly.
Awesome. Awesome. Well, Nate, it's been a pleasure to have you. Thank you so much for being here today. Hey, guys, I hope you enjoyed our talk today. Nate did a fantastic job as far as explaining when it comes to entrepreneurship, when it comes to the mortgage business. I found a ton of value in some of the things that he shared, and I hope you did too. And hey, listen, if you like this episode, like it and share it with another business owner that can benefit from it. And until next time.
Thank you, Schubert. Have a great day, everyone.
Thank you. Bye, everyone. You've been listening to the Smart Business Owner Podcast. See you in the next episode.